Many people seek to understand how the stock market works and what it takes to generate money as a stock trader. In our video today, we take a look at some of the most successful stock traders of all time and how they invariably became household names in the business of stocks and trading. In no particular order, let's begin starting at number 7. Number 7. George Soros. Born in Hungary in 1930 to Jewish parents, George Soros, famously known as the man who broke the Bank of England, is accredited as one of the greatest stock traders ever. Soros earned $1 billion in profit 24 hours after placing a bet against the British pound. He borrowed pounds and then sold them, helping to push down the currency's price on forex markets and ultimately forcing the UK to crash out of the European exchange rate mechanism. George Soros is believed to have earned a total of about $44 billion through speculation. A theory based on the relationship between cause and effect is believed to have helped Soros get a clear picture of asset bubbles and value discrepancies. His fortune has been used to finance many philanthropic works and has made tremendous contributions to sectors such as health and education. Number 6. Paul Tudor James. Tutor Investment Corporation is one of the world's leading hedge funds and was founded by the Black Monday hero Paul Tudor James. Born in 1954, James kicked off his journey by trading cotton. After 4 years, he made profits from his trade and later hired people to trade for him. He was shot to fame on Black Monday 1987 when he made an estimated $100 million during the 1987 market crash, even as the Dow Jones Industrial Average plunged 22%. 5 years after the famous trade, James was appointed chairman of the New York Stock Exchange, NYSE. Paul Tudor James founded Tutor Investment Corp. in 1980 with around $21 billion in assets. With an estimated net worth of $5.8 billion, James is undoubtedly one of the most successful stock traders of all time. Number 5. Nicholas Darvis. If you expected to see only business and financial moguls on this list, then Nicholas Darvis just came to prove you wrong. The dancer was born in 1920 and is best known for his book, How I Made $2 Million in the Stock Market. After failed investments, Darvis looked for dues in the stock volume, waited for a substantial increase, and then narrowed his choices down to stock trading and waited for a breakout. Darvis did all these back when the only way to contact his broker was via telegrams. The self-taught investor preferred to pay attention to public sentiments, a philosophy that thrived in volatile markets. After successfully making $2 million on the stock market, we can say that Nicholas Darvis has earned his keep on this list. Number 4. Jesse Livermore. Jesse Livermore was so good at placing bets that he was banned from bucket shops, where he placed his bets. After leaving home and settling in Boston, Jesse Livermore began posting quotes for a stockbroker as a 15-year-old. In Boston, he bought his first shares and earned a profit of $3.12 with a capital of just $5. He got his big break at 24 when he converted $10,000 into $500,000. Livermore encountered financial challenges along the way, which resulted in huge losses. Still, he had a remarkable ability to bounce back, and by age 30, he was making $1 million a day. Number 3. Peter Schiff. Dubbed Dr. Doom, the American trader and investor, became famous after predicting the stock market crash of 2007 to 2010. In 2006, Schiff warned of an economic collapse, urging people to take action based on his prediction. He is an American stockbroker, financial commentator, radio personality, and the CEO and chief global strategist of Euro-Pacific Capital Incorporated. Peter Schiff started Euro-Pacific over 20 years ago and has amassed a fortune with an estimated fortune worth of $150 million. Critics write him off as a conspiracy theorist, but he is doing something right to succeed in stock trading. Number 2. Richard Dennis. The Prince of the Pit borrowed $1,600 when he was around 23 years old and turned it into $200 million in 10 years trading commodities. Interestingly, he only traded $400 of the $1,600. Using mini contracts, Richard Dennis started to trade his account at the Mid-America Commodity Exchange. His trading technique was to trade seasonal spreads. He would hold bets to profit as the market increased and bets to profit as the market decreased, as well as positions in futures contracts simultaneously in related futures markets. He founded the famous Turtle Traders Group. Number 1. Warren Buffett. Born in 1930 in Omaha, Nebraska, Warren Buffett not only knows how to enjoy the good things of life and to start his day with his favorite Coca-Cola can, but he also knows how to trade and trade big. He has a guiding principle of buying stocks at bargain basement prices and holding them patiently. Having a penchant for long-term investments, the business magnate built his capital up to $140,000 from $9,800 between 1950 and 1956. His partnership saw a 251% gain, cementing his place in the stock market in 5 years. By 1962, Buffett had a capital in excess of $7.2 billion and had more than 90 limited partners across the U.S. 10 years later. His assets were more than 115% compared to Dow's 122%. The chairman and CEOs of the conglomerate Berkshire Hathaway are a few professional stock traders who defeated capitalism. We have come to the end of yet again another segment. We hope to come your way another time, but in the meanwhile, remember to subscribe to our channel and turn on notifications. Till we see you again, enjoy your time.